So we are taking up today industrial all risk insurance. Industrial all risk insurance, or in short you can call it as IAR policy. So say this IAR policy is issued for corporates normally, because earlier the minimum sum insured limit for this insurance policy was 100 crores. But now, exceeding 50 crores, this policy can be issued. So let us see what are the important aspects of industrial all risk insurance. So among the salient features you will find, this is one comprehensive, convenient and cost-effective policy for industries, for corporates, for SMEs, where the sum insured is more than 50 crore. This is most comprehensive, convenient and cost-effective policy. This is a package policy of all risk nature, not a named peril policy, because whatever sections are covered there, they have their own coverage. So all perils covered except certain specific exclusions. That is the reason this is known as the all risk policy. So far this was a tariff policy in the Indian market because the sections covered under the policy are all governed by the respective tariffs. Fire tariff, MBD, engineering tariff, like that. So the most common factor for this policy is the eligibility, because industrial risks having overall sum insured in excess of rupees 50 crore at one or more locations are entitled to get this. So this industrial all risk policy otherwise cannot be issued for a sum insured less than 50 crore. There the Laghu Udyam policy or the standard fire and special peril policy will be there. If the sum insured, even standard fire and special peril policy is issued over the sum insured of 50 crores. So over and above 50 crore only, this policy can be issued. Now this is a single document policy, means one proposal form. Losses, MD as well as BI. This MD stands for medical material damage and BI stands for business interruption. Due to burglary as also covered. Transit risk inside industrial compound is covered. Transit means marine. Marine risk within the industrial compound is automatically covered. Considerable premium saving is possible due to lower rates, especially for machinery background cover. Under insurance up to 15% is ignored. That means if this sum insured of this policy that is over 50 crore is not adequate, or this is underinsured for 15%, still there will be no deduction, there will be no loss to the insured because that will be ignored. Similar as applicable to the Bharat Laghu Udyam Suraksha. There again the 15% under insurance can be waived. Here again it is 15% under insurance can be ignored. No depreciation deducted from machinery breakdown loss, may be total or partial, for limited life equipments. There are certain limited life equipments like rubber parts, fiber parts, etc. No depreciation would be applicable. Handsome discounts available for obtaining higher deductibles as well as good claims experience. See, this higher deductibles means whatever compulsory excess is applicable to the policy. If insured is ready to bear the loss and multiples of that compulsory excess, the policy can provide the discount, and that discount would be as per the slabs provided. That is the reason the policy will provide handsome discount for obtaining higher deductibles as well as good claim experience. If the previous claim history is good, underwriter can provide the discount also. Now, business interruption due to fire and allied peril, that is FLOP, policy is compulsory. Means that is inbuilt. That is not to be opted. That will automatically come with the coverage. Business interruption due to fire and allied peril, or in other words, FLOP policy is inbuilt, compulsory it is. Second part, business interruption due to machinery breakdown, all boiler explosion or electronic equipment is optional. That means loss of profit policy with machinery or boiler or electronic equipment, that is known as the MLOP, is optional. If the customer wants, he can select. If he don't want, he should not select. Normally, some companies are not providing even the MLOP. So, compared to traditional policies, higher excess is applicable. Say, for example, whatever compulsory excess is applicable to fire insurance here, the compulsory excess is a little higher. Whatever compulsory excess is applicable to the burglary insurance or to the machinery breakdown insurance, here the compulsory excess is little higher. No declaration facility available. Means for the stock purposes, if the stock is fluctuating frequently, that will be covered under the policy. No declarations are required. Insurance under IAR on reinstatement value basis only, except stocks and stock on market value basis. That means under IAR policy, all properties, all machineries, all equipments and furniture fixtures will be automatically insured on reinstatement value basis, except stock, because the stock will be covered on market value basis. Means at whatever value the stock is purchased, at the time of insurance, the insured may get it covered even on purchase value. But at the time of loss, the market value of that stock will be assessed and that will be paid. If in that case, the underinsurance up to 15% was found, that will be considered. So IR policy not available for petrochemical risk. Petrochemical risk is one big risk. But for that purpose, the industrial all risk policy cannot be issued. For the simple reason, there is a separate petrochemical insurance policy with all the insurance companies. That means petrochemical risk is not part of industrial all risk policy. Now again see the eligibility. This policy can be issued to any industrial risk of sum insured more than rupees 50 crore at one or more than one locations. So for less than 50 crore, this cannot be issued. Now, two insured or two or more units in complex may be eligible individually for IER if qualify individually. एक ही कॉम्प्लेक्स में अगर दो डिफरेंट यूनिट्स हैं और वो दोनों IER पॉलिसी चाहती हैं तो दोनों का सम इंश्योर्ड 50 करोड़ ईच है होना चाहिए. अगर वो दोनों इंडिविजुअली क्वालिफाई करती हैं तो दोनों को IER पॉलिसी दी जा सकती है. दिस इज द एलिजिबिलिटी क्राइटेरिया. नाउ स्कोप एंड स्ट्रक्चर ऑफ IER पॉलिसी. सेक्शन 1 इज मटेरियल डैमेज सेक्शन. But this material damage section includes number of policies which are issued separately by the insurance companies. Here they are clubbed together under the umbrella of industrial all risk policy. What these policies are? Fire and all special perils, burglary, machinery breakdown insurance, boiler explosion, electronic equipment insurance. These 5 sections are inbuilt in section 1. Coming to section 2, that relates to the loss of profit or business interruption. So section 2 says, following fire and all special perils, if there is any loss of profit, that is covered automatically. This is compulsory. This is part of the coverage. But the loss of profit due to machinery breakdown, boiler explosion, electronic equipment is not automatically covered. This is optional. This has to be opted by the insured. If he is opting, premium is chargeable on that. If he is not opting, that will be ignored. Simple thing. So the option is given only for the one section, that is MLOP. This MLOP could be due to the machinery, due to the boiler, due to electronic equipment, but this is optional. Now, this business interruption or FLOP policy here, which is inbuilt, which is compulsory, which is part of the policy, what does it cover? It covers only physical loss or damage indemnified in ordinary fire policy called property damage policy. If there is any physical loss to the property, that will be covered under the fire policy. That is also done under the material damage policy or the property damage policy. However, due to interruption in business activity, due to operation of insured peril, under ordinary fire policy, insured continues to suffer further losses which are not indemnified under fire policy will be paid here. That means if there is any loss to the property, that will be covered under fire. If there is any loss to the machinery or to the stock or to the furniture fixtures, that will be paid under the fire policy. But that fire policy will not pay loss of profit, loss of income. So that loss of income or loss of profit caused due to the insured peril of the fire insurance policy will be covered here, and reduction in gross profit due to decreased turnover will be covered here. So this business interruption policy due to fire, that is known as the FLOP policy, will pay only gross profit. So if there is a loss to the gross profit, so obligation of funding for non-variable costs like rent, taxes, interest, depreciation, salary of employees, etc., called standing charges, they are also part of the gross profit. So if there is a gross profit, then nothing is payable under this section. But if there is a loss to the gross profit, then the policy will pay. So similarly, this business interruption policy can take care of such losses which indemnifies the reduction of gross profit. That means net profit plus standing charges are lost or reduced, or the increased cost of working. Under these two circumstances, the insured will be suffering loss of income or loss of profit. So this business interruption policy will pay that liability, because establishment of liability under property damage policy is prerequisite for indemnity. That means fire policy is prerequisite. So fire section is already there in the industrial law risk. That fire section is already covering the fire liability, that is physical damage to the properties. But if due to the insured peril there is again loss to the income, there is a loss to the profit also, that will be paid under this business interruption policy. Since linked with property damage, all terms, conditions, exclusions are equally applicable to the business interruption policy. If you think this is a complicated one, I simplify it. See in this tabular manner. That would be easy for you to understand. What is the coverage of IR policy? Fire section is there, FLOP section is there, burglary is there, machinery breakdown is there, water explosion or electronic equipment is there. They are separate traditional policies. But in IR policy, single document policy covering all 6 policies. Now what perils are covered? In traditional policies, named perils are there. Each policy has the list of the perils covered under the policy. But in IR policy of all risk nature subject to certain exclusions or excluded clauses. Now what is the eligibility? For traditional policies, for any sum insured, anyone can take the policy. Says for sum insured fire, policy is required even for 10 lakh, it can be taken. Burglary is required for 2 lakh, it can be taken. Burglary is required for 2 crore, it can be taken. For residential offices, industrial and petrochemicals, any policy can be taken traditionally. But in IR policy, unless there is a sum insured of 50 crore, this policy cannot be taken. And this policy is issued for industrial risk only, that is for corporates or SMEs. And this policy is not issued for petrochemical risks, that is specific. Again, option for coverage. In traditional policies, means other than IR policies, insured can choose specific covers. Only selected machineries can be covered for MB, machinery vector. But in IR, entire property at a location must be insured and no selection is allowed. Our business interruption due to machinery breakdown, that is MLOP, is optional, that's all. Otherwise, everything is automatically covered. Now, basis of sums to be insured. building, plant and machinery can be insured on reinstatement value or market value. But in IR policy, this covers everything on reinstatement value except stock. The stock is covered only on market value. A condition of average. In traditional policies, a strict application of condition of average is there. It may be a fire policy, it may be a machinery policy, or any other engineering policy like boiler or electronic equipment. A strict application of the condition of average is there because under insurance is applicable there. But in IAR policy, under insurance is still applicable with a condition that the 50% will be waived or ignored. Means the 85 sum insured will be treated as the adequate sum insured. If it is 100%, well and good. If it is more than 100%, well and good. But in any case, if it is 90% or 85%, still it is good. Insured is going to lose nothing. Discount structure, claim experience, discount for each policy in traditional policies. But in IR, in addition to claim experience, discount for individual section is applicable. And discount for higher deductibles is also there. Access, nominal access is there in traditional policies. But in IR, comparatively higher access is applicable. Additionally, additional clauses are applicable in this policy, which are subject to option. These are available with some companies or most of the companies allow them. These are opted separately. Now, exclusions. Section 1 is material damage section of the policy. Material damage is a section where all the related policies are covered under the IR policy like fire, machinery breakdown, burglary, EI, FLOP, etc. So what about the exclusions? Faulty or defective design, defective material or workmanship, inherent vice, gradual deterioration, deformation, distortion, wear and tear, interruption of water supply or gas, electricity, fuel systems, and collapse of cracking or melting. These are normal exclusions. But in addition to it, there are certain other exclusions like corrosion, rust, जंग लग जाती है, shrinkage, सुकड़ जाता है, pollution, unless resulted directly by a cause not excluded in the policy, larceny, छुपट चोरी, acts of fraud or dishonesty, inventory shortage. At the time of insurance, it was something else. At the time of loss, some shortage was found. Misplacement, unexplained disappearance, coastal or river erosion, normal settlement of new structures, willful act or negligence on the part of the insured, or cessation of work, बिना किसी कारण के काम रोक दिए, cessation of work. These are excluded. Under these circumstances, the insurance company will not pay the claim. Continue. These exclusions are specific. Why? Because policy is always policy. Unless the perils are not excluded from the policy, everything is covered. So every insurer is specifying the list of exclusions. Because normal things like delay or loss of market, war, invasion, temporary dispossession, destruction of property, nuclear weapons, ionizing radiations, impact due to floating or waterborne objects, act of terrorism, they are the common exclusions for all the policies. So here again they are the excluded risks. A special exclusion subsection B, that is business interruption, that is loss of profit policy. So for IR policy, in material damage section, the exclusions are separate. And for business interruption, the exclusions are separate. Because a FLOP policy will not cover any restriction on deconstruction, ensures lack of sufficient fund, damage due to mechanical, electrical breakdown, same which are covered, which are excluded from the FLOP policy. Damage to electronic installations, damage resulting from distortion, same there, no different. Excluded properties under IAR means certain properties are not covered other than exclusions, like money, check, stamp, bond, credit cards, jewelry, precious stones, curios, work of art, goods and interest, computer system records, plans, designs, explosives, patterns, models, modules, land, road, rail lines, dams, reservoirs, canals, bridges, docks, jettisons, offshore property, etc. Other properties are like vehicles license for road use, property in transit other than within the premises, property in course of demolition, livestock, growing crops of trees, property moved to other locations, property is insurable under marine policy as a result of undergoing any process. And exclusions are plenty. We don't need to cram them. We only have to understand that these are the properties which are not covered under the IR policy under two different sections. One is material damage section and the other is business interruption section. So both are having their specific exclusions. Certain exclusions are related to the properties. Now there are certain conditions for IR policy. These conditions are important because all conditions of normal fire policy under the warranty of fire tariff applies to the IR policy. Though we are getting confused over it because the tariff is discontinued, but so far as all the terms, conditions, wordings and clauses are completely applicable to all the general insurance companies and they are using it. Unless they are coming out with their newly innovated covers, they are following the same practices. And it is very difficult to design any innovative cover. Reason being, in so far these wordings, terms and conditions are decided by the Tariff Advisory Committee on the basis of the legal verdicts decided by the Court of Law. So these practices are established. If any company is coming out with innovative ideas, their verdicts would be difficult. Every verdict has to be interpreted in the court of law if the case is challenged before the court. So policy voidable in the event of misrepresentation. Voidable means it is neither void nor valid. It depends upon the aggrieved party. Aggrieved party, if he is able to submit his part and proof, it can be either paid or it is rejected. Because the misrepresentation or misdescription is on the part of the insured. No cover after 7 days from fall or displacement of any building. Policy is voidable in the event of alteration of activity. Cancellation of insurance could be there. If cancelled by insured, premium at short period scale is refunded. If cancelled by insurer, after giving 15 days notice, premium on pro rata basis is refunded. Now, general conditions, duty of the insured. This is the duty of the insured to intimate the insurance company within 15 days and submit the list of items damaged with the value. If there is any loss, it is the duty of the insured to immediately inform the insurance company or at the most within 15 days. And also submit the estimated loss. What loss is there? Because the list of items damaged with value, what is the value of that? So then only the estimate will come. Because insurer is not liable if the insured is unable to submit all necessary details within 12 months. That is reasonably a very high period. On the other side, the rights of the insurers are there. Keep possession of damaged property, sell or dispose of. Policy benefits fixed, forfeited if claim is fraudulent. Insurer has option to reinstate. Condition of average is there. Condition of contribution is there. Condition of subrogation is there. They are the normal practices applicable with all the general insurance companies because IR policy is almost similar to all the general insurance companies. Some insured to be on the reinstatement value basis, except stock. Value of loss assessment as per the provisions of reinstatement value. Removal of debris, some insured to be specified separately. Separate sum insured to be offered for each item, like building, plant and machinery, furniture, piping, etc. And thereafter, add-on covers. The add-on covers are available. Following add-on covers can be granted on payment of additional claim like terrorism damage, startup expenses. Because normally, these are the perils which are covered in the Sukshma Udyam and Laghu Udyam, but not in the IR policy. Because IR policy coverage depends upon the standard fire and special peril policy. So IR policy can be extended by attaching following clauses like escalation clause, omission to ensure additions and devastation, temporary removal of stocks. Object is Sukshma Udyam and Laghu Udyam fire policies are not part of the industrial law risk policy. Industrial law risk policy is pretty old policy. This is since beginning. All the public sector insurance companies were selling it for the big corporates. And on the same pattern, the policy is continuing even till date. And the same sections are there. The only change is the sum insured limit has been reduced from 100 crores to 50 crores. Now, to the any industrial unit which is having the sum insured of more than 50 crores, this policy can be given. Earlier, the limit set by Tariff Advisory Committee was 100 crore and above. Now that relaxation is there. Otherwise, as far as coverage is there, section is there, exclusions are there, they are the same. Even the deductibles are the same. So, for example, these are the compulsory deductibles. And these are a little higher than the traditional insurance policies. For material damage, that is section 1. That covers the fire policy, machinery breakdown policy, burglary policy, boiler and electronic equipment policy. There the compulsory deductible is 5% of claim amount subject to minimum of rupees 0.50 or maximum 5.00 minimum. This depends upon the claim amount. So this is obviously a little higher than the traditional policies. And for business interruption, here 3 days gross profit. Here this is lesser. Because if you take a normal FLOP policy, there the compulsory deduction is for 7 days or 1 week. Here in IR policy, the compulsory deductible applicable on business interruption or FLOP is only 3 days gross profit, subject to minimum of 0.50 minimum or maximum 5.00 minimum. So this is again important. And for otherwise things, this is provided here. Up to 7 days this much, up to 14 days this much, up to 35 days. This is already defined. Now discount for good features. The policy is given with discount like fire extinguishing appliances, claim experience, higher voluntary deductibles, age of the risk, distance from the neighboring risk, class of construction, any other good feature. These are called good features because they are reducing the risk. See, the basic fund of the insurance is if the risk is higher, premium is higher. If the risk is lower, premium rate is lower. So anything or everything which is reducing the risk, that makes the insured entitled for discounts. Now, this is being a big risk, that is more than 50 crores risk. Normally, insurance companies are sending their risk engineers to inspect the risk. And risk engineer is submitting their risk assessment report. And the risk engineer is highlighting the facts like process details and storage details, facilities provided to minimize the hazard involved, maintenance practices adopted, electrical installations, safety and security features, fire protection, housekeeping, age and condition of plant, history of natural hazard, comments on the critical equipment and provisions made, claim experience, PML experience. What is wrong? So that way, the report of risk engineer is very important, because these 10 or 12 features are most important from the underwriter's point of view. Based on this engineer's risk assessment report, the underwriter will accept the proposal or decide the premium rating. So the report is very important. So this is industrial law risk policy. If you have any doubts, you can ask. In brief, because this policy is very comprehensive and a lot many sections are there. But in brief, this is explained like this. If you have any questions, you can ask me now. I am confident most of you are receiving the proposals from the brokers for IR policy. Because corporates prefer to take the IR policy. Reason being, for the risk of more than 50 crores, this IR policy is advisable. Here the premium is less and compulsory access is a little higher. But the sections or the coverages required by the corporates are already there, inbuilt there. So by one proposal only, they are getting a wider coverage. They don't need to go for separate policies. And the brokers are the intermediaries who are preferably going for the industrial law risk policy as compared to the Sukshma Udyam or Laghu Udyam or standard fire and special peril policies. Okay, now check your mail ID please. Have you got it? Anybody can confirm?